Hello guys, good day or good evening depending where you are around the globe. We record that session for those who can't make it out there today, and we will talk about what the users have been choosing inside the vote last week, because we're basically reporting last week's vote as I was unable to handle that video right in time. So we will talk today about the momentum. So basically a question answer session about the momentum, what you might think is too foggy about that thing. So I will try to give you the best answers as possible about that thing. So if you have any doubts or anything that get you confused when you read out your momentum indicator, then that's the time to ask your questions. You need to have things really clear and clarified into your head whenever you get into trading with my indicators. If you have doubts, you're going to get into troubles. You need to be confident with the tools you're using, the signals you will see, and you don't have to hesitate too much time when you have a signal. It must be crystal clear to you. Either the signal is good or it's bad. Either you take it or you wait. It really is that simple. So anyway, that being said, we're going to start by a quick introduction, let's say 5 to 10 minutes, talking about the momentum in general. What is the momentum? What it really represents in terms of, because basically that's just a curve, an oscillation, an oscillator that is somehow replicating the price movements, and it's important to see how this is plotted on the chart, what it relates to. I'm going to get into slightly more details about how my own formula is calculated. Of course, it's top secret, so I'm not going to give you the clear entire formula, but I'm going to give you how I've been coming up with it and what are the components of that thing. Sorry, I need to start the screen share indeed. Alright, that should be done, and you should be good to go with that. Alright, so momentum is a price derivative. It's really the ground rules you need to understand. Whenever the price moves, the momentum will move, and what makes move the price, the momentum, is the price itself and nothing else. It doesn't care about volume, doesn't care about anything else than price. So you cannot trade with just momentum. It's not possible. It's just, it will be the exact same as trading with just price, which is absolutely not possible into trading. You need to limit the risk, and in order to limit the risk, you need to use derivative from price. So momentum is one derivative of price, but it's not sufficient enough to base your entire strategy out of this. Every person who's just trading about momentum using stochastic strategy or whatever, this is just pure bullshit. So you can don't lose your time in there. If you see someone trading with just one indicator, it probably is a fool, either trying to sell you some shit or just not a trader itself. Anyway, so always combining is the key element to understand. The trading signal first. The trading signal is just one of the 3 steps of a strategy. You cannot trade just with a signal. You need to make a technical analysis first, and you need to check your context. If you don't do those steps first, you're gonna get into heavy troubles. If you're one of those guys who just tested the indicators by opening the charts, putting the indicators on your charts, and wondering, scrolling the chart to see the signals and just saying, okay, this is good or not good because it's giving good signals or bad signals. It really is the most stupid way you could try those indicators, because this is not what they are meant to do. They are meant to tell you if the current price area has high probability to reverse or not. And that's only the purpose in here. So momentum is only going to study price and price itself, and only the price, to see if it triggers some kind of patterns that can give high potentially reversing near the current prices. All right? So that's the only goal of pro momentum and momentum in general. okay? Because pro-momentum is just a momentum indicator with its own formula, but it's not necessarily better than RSI in a general value. To me, it is better. Of course, I've been creating that formula, so I wouldn't have done that if I thought the RSI was better, or the MACD, okay? So I think mine is better than those two because it's kind of a mix between the RSI and the MACD. But of course, you're free to use whatever you want. The pattern are triggering out of my own momentum, but you can change the display to show whatever you like to trade with. So if you're confident enough and have more confidence trading with RSI as a momentum line, then you can put the RSI in there. All right, and there you have a 14 period RSI, which is standard in technical analysis. So if you want to have a look at what most people have when they have a look at their charts, you can use that. But everything that is calculated within the indicator will be calculated with my formula, because my patterns come out from my own formula. Anyway, that being said, we're moving on, okay? So I wanted to have a formula, because this is barely unreadable to me. When I see something like that, it's just pure noise. I really hate RSI for that, because it's really the most noisy momentum oscillator you'll find out there. Stochastic is far better to read, and MACD as well. As you can see, stochastic, you can way easier read that thing, even though it's really noisy as well. Okay, you got true strength index, better one. Okay, pretty close from what I've been creating actually. As you can see, it's the closest thing you could find from my own momentum, but it is different as well. Okay, mine is slightly more aggressive than the TSI, to set things straight. Okay. So I wanted to have something that is kind of in between the RSI and the MACD. So it was less violent and sharp than the RSI is, and much price responsive, much more price responsive than the MACD is, because MACD is out of moving averages, which means it introduces lag in the calculation. So you will be able to see the price going upward and the MACD going downward. It's not going to be the case with my momentum. Anyway, now that you know what momentum is, it's just a price derivative. You need to know what it relates to. What's basically displayed in front of you beyond just a line that you have right there oscillating from top to bottom values or things like that. So you need to be aware that the momentum is like the strength you put into a market move, okay? The higher the momentum value is, the more strength that movement is pulling in the market. Generally, that suggests the opponents are very weak, okay? Because you can, strength and weak is really like two opposites, and you can consider the two. So when you see a strength in a movement, you can consider that the opponents are really weak. So the higher the momentum is, the less aggressive you want to be, okay? Or the less precise and the less quality signal, the more quality is the signal you need to have coming right after this, okay? So remember that it's really important when you have a top-notch momentum like that. You really want to have a strong resistance and a very clean signal to trade against that. Otherwise, the momentum is probably going to keep on pushing that way. It will happen sometime due to a violent reversal in which you have a very violent momentum and a very brutal reversal, but it will always happen on a very, very precise and clear technical levels. Generally, when momentum is having clear bursts like that, it generally keeps on pushing the upside. Or the downside, of course. So consider it that way. And whenever the momentum is positive, let's say values above 0, it generally means the price is moving upward in a bullish trend. Okay, at least the price are moving upward, and as long as the momentum remains above 0, that movement is probably going to keep on pushing. As long as you don't break supports, of course. As you can see in here, and this is why you have those trend lines, and we're going to have a talk about that later on. When you see the momentum rebouncing out of the trade lines, generally means that you have an ongoing trend. It's pure and simple. So the longer you have the trade line, the longer the trend is, and when the trade line is far more above 0 value, you know that the trend might be over. We're gonna need to range. Not necessarily that the trend will reverse, but that the trend part of the price movement is probably going to get over. As you have one example in here, trend line is getting to positive values. You know at that point that the next time we're going to try finding that trend line, probably is going to be broken down. Same example in here, broken down. Same example in here, broken down. Okay, so trend cannot last forever. Of course, there will be counterexamples at every time, but generally, when you have the trend line too high, means that you will get into range situation. At least the trend is going to wait and see and temporize things. Okay, so that's it about the trend line, the trail line. Okay. Then we're going to get into other indications about the pro sine wave, which are what are those things you have displayed in your chart. So first thing is those crosses. I've been pulling them really foggy and almost hard to see. But that's the reason I wanted those, because those signals are the most aggressive ones you could have, meaning the less quality. You don't want to trade those crosses unless you are in a very clean level you want to trade on, or into a very, very clean trend. As in here, for example, you can consider those signals all bullish because you really have a clean trend and you can keep on following that trend. But despite those two conditions, trading the crosses, either they are blue or red, is high risk signal, meaning that you can take those trades, but you really need to have a very clean sine wave confirmation and you need to be on a very precise technical level. Okay? Then the second signal in terms of strength is what we call the overbought oversold pattern. This is those blue dots and the opposite red dots, of course. We might have one or two at some point in here. Yes, we do. Okay. So that's the thing. We're going to get to the same example we had with the French user, which is really, really a good one. We took the example right here, I guess. Was it right there? No, it wasn't. I can't remember where we've done our analysis back then. Maybe it wasn't the daily charts. No. I'm trying to find my way here. Anyway, we're going to just take another example. It just works in any case, so we should be good to go in here. We're going to take an overbought pattern example. So in here, I got oversold cluster, and we're going to talk about that. Okay. So first thing first, need to occur on the technical level, so this one's not usable. We're going to take another one. No way, no way. Sorry about that. In here, let's see if we are in a technical level. Yes, we were in here. As you can see, we had a tight resistance in here. So let's say we've made our analysis, even though this is not really the big of a resistance. The big resistance was right here. So let's consider, no, it's not valid actually. I cannot trade that. I need to find a valid overbought or oversold cluster reversal. In here might be one. Okay. So we need to get really far back in time to see the last time we've been testing those prices. Okay, so where was our reversal? It was right there, okay. And indeed, that was support last time we tested it. Okay, getting there. All right. So why here? Okay, so we clearly cleaned a support in here, got technical cluster, lots of candles closing and opening in here, built a range, created a bullish reactivation out of the range. Sorry, so here you have a technical level, right? So you're good to trade that price. So now we're getting back to the signal. Where was it? Yeah, right here. Okay, so this is as you can see, once again, just a pure technical analysis. I've been doing it in a few seconds. The goal in here is not to take the entire strategy. We talk about momentum and just. Okay, so we had a technical level. Step one, it's really important. Let's say that we already checked step one, which is context. We have to buy that support, eyes closed. So all we need right now is a signal. Okay, now we're going to put the market replay. Because once again, trading what's already in place is really too easy. Okay, so we're going to trade it the way we would have seen that in real time. So that's how it is. Okay, as you can see, momentum is telling you bearish. Okay, so for now you've got nothing to trade. Sine wave has already reversed to weak bullish. Okay, and you've got your target right here. Means that you are probably going to have a bullish signal if your price reverses down here. And guess what? This is where you have your technical level as well. So for now, you will be waiting to have the price as close as possible from that level. And all you wait for is a momentum confirmation. Because you already have the sine wave confirmation. All you know is that if momentum is giving you confirmation in here, you're buying. Now we're going to see when this happens. Nothing, nothing, nothing. Okay, there you can go. Got bullish OK pattern. You don't buy that kind of candle. Okay, you don't do anything like that. We're working that support area. So if you're really the most aggressive kind of trader, you can buy right now, but you're buying a candle that closes at the low. And really, it's not something you want to buy. Right here, this is something you want to buy. There you have a candle reversal. It's what we call Harami pattern. So this is Harami reversal pattern. You can buy with a stop loss at double the amount of those candles. So you put the stop loss down there, and you're buying right here. So this is where you're buying at the candle close. Not before, not after. You pay the candle close. Okay, this is where you would have done your buy entry according to the trading signals. Why do you do that? Because you are in the momentum, in the sine wave target. And that target is the projection of a bullish cycle. It's a weak bullish cycle, but when you are in a weak bullish cycle, you can pay the extension and only the extension. And the price needs to be near the price. Cannot be there. And when you have that and the price reverses near the projection of the cycle, sine wave triggers it as a bullish cycle. And you see it will happen, the candle right after. So right here, you can trade. There you have your confirmation. Okay, there you was trading aggressively, now you have the price confirmation. At that candle close, you know you can put your stop loss below that low. Normally the price should not go lower than that. There you go. You've got overbought momentum, you know you're trading well. It's pure and simple. Don't have to be much complicated than that. So at that point, is everything clear to everyone, or do I need to get into more details about that trade entry? Where would you get out? Okay, that's an important thing. Actually, yes, it is. But we're just taking care of the trade entry. Because right here, we're taking care of the sine wave, of momentum, which is step 3 of the strategy. It's just, so today, we basically just take care of the trading signal. So as I said, we flushed out step 1, considering that we needed to buy that price. I don't even know if we had to, okay? And we considered that we made a very a 10-second technical analysis saying that this is the price we would like to see traded by the bullish guys. And we just said, okay, if we have a bullish signal in here, then we're going to trade. So what we were waiting for is the bullish signal. We had it right there, aggressively. We had it confirmed right here. Pure and simple. What triangle do you refer to? Because the blue triangle you have right here, you don't have any red triangle coming right after. As I can see right now, it's just bullish. Okay, remember the triangle is acting as a confirmed signal. So right here, you know your signal is confirmed. You got bullish reactivation by a triangle, and you have the bullish OK signal. It's just get back in time. When you have that candle closing, okay, so we need to get back in time because sine wave is not triggering, momentum is not triggering when the candle is closed. We need to get 1 bar before. I'm going to get into details, okay, but that, okay. This is what we call, by definition, a bullish signal by the indicators. Trading a price, you've been studying where the price could reverse. And you need to have 2 things to have a 100% confirmed signal. Blue triangle, bullish momentum, and bull OK on momentum. When you have those 3 things, you just get your entry and you don't ask any more questions. The preceding one, oh, okay, but at that point, you're not buying. You're not buying. Why aren't you buying? Because you have a weak bullish momentum, which means that if you ever consider making a buy entry in here, you do it with very low leverage, because this is very likely going to go lower than that. But sometimes the price will reverse on weak bullish cycle. It can happen, but generally we break down those cycles. This is why we call them weak bullish. It says that if you absolutely want to buy those, then get in, but don't put too much leverage in here because you're probably going to be faked out. Okay? So you don't buy at that point because sine wave's not bullish. Sine wave's just weak bullish, which is not a bullish signal. Or you need to have really strong confidence in buying that asset if you want to do it. Do you get the difference, Dav? Once again, no problem if you're not. Just tell me. This is why we're doing these things live, so you can ask the question. No one will be stupid asking questions. Okay? Asking a question because you don't understand something is the best way you'll ever have to learn. Okay, so then that's just the thing. If you had to buy, but once again, step 1, 2 must have been done before that, before considering searching the signal. If you're searching just bare signals out of nothing, then you are going to trade totally out of the strategy. And remember, what makes you a winner in the long run is respecting that strategy and applying as much as possible anytime you've got the 3 steps confirmed. For a blue ball, what you call a blue ball? Oh, okay, there you got a blue ball. But let's get back in time. Once again, as you can see, you really need to have the bull okay signal plotted on your chart if you want to trade. That's the minimum you need to have. So let's get there. Blue triangle. Do you see bull okay written in here? You've got nothing like that. So you cannot trade that signal. You wait for the price to go lower. All right? It's really that simple. The blue dots we have right here, we're going to talk about that, how that pattern is completing. I was searching for this in order to trade, but I haven't found one. Sorry, we did back then. That signal was the goal. So let's get back in time. Let's get forward in time back to the signal itself, the one we've been trading. All right. So this is what we call an oversold cluster. How that cluster is triggering is there you have the candle that triggers the pattern. Okay. So candle is triggering right here. What you do generally, you take the low of that candle. You take the high weak when it's an overbought cluster. Okay. You take that weak. And generally, you don't want to see candle closes below that level or above in an oversold cluster, in an overbought cluster. But in sometimes you'll have this, which we call fake breakouts. Consider this as a support. Okay, but from time to time, the market will go beyond that price just to reach out to a technical level, just like we did right here. Means that the pattern is triggered right here. Sine wave momentum sees that the momentum is some kind of getting oversold. But oversold doesn't necessarily mean the price will reverse, because once again, we trade price ahead of anything else. So you cannot trade right here as your technical level hasn't been tested yet. So this is normal to have that bearish breakout in here, meaning a candle closing below the level you shouldn't close below to. But the candle right after is going back to close above. And it's triggering a false breakout pattern, which we call the harami. When you make a candle closing at the low and the next candle is closing nearly at the high. This is invalidation candle. Okay, so this is bullish reversal candle, which means we try to break that down, failed it. The next candle is a lower shadow candle as well, trying to break it, failed it. And I hear second harami pattern. So if you consider that level as the one who triggered the pattern, we respected the strategy right here, as we never ever managed to go lower than that. With confirmations. You can see that pattern would have been invalidated if that candle, right after this one, if the second candle would have been another bearish candle, then we would have had a bearish confirmation, which means that the market is pushing further below oversold cluster. When the market is oversold, if the bulls are in control, they're going to buy it. Let's be pure and simple. When you push the momentum to its limit and you want to be on the opposite side of what it's doing, you're generally going to buy eyes closed. So if the market is bullish and you have oversold cluster, you want to see the bulls taking it over right instantly. If they're not, and if the prices keep on pushing below with new candle closes, means that the bulls are not in control. And the only false signal is right here, is when you go search for a technical level. So when your pattern is triggering above a level, you wait to have the level tested first. Once again, you trade a price before trading a trading signal. Never forget that, or you make big mistakes in trading. If you just get into watching the indicators and searching for signals, that's the common mistake. I told you, the guys who come here trying the indicators for a week, and the first thing they have in mind is not reading the manuals, not watching the videos, not understanding what's going on, not learning the strategy, just going into charts, putting the indicators and watching the signals to see if they're good or not good, if they're going to buy easy, sell easy. All those guys are just totally out of the way. It's not how you make that work. It has to be plotted inside an overall strategy. That's the strategy who mean to limit the risks and get you positive return when you trade. Trading just the bear signals out of nothing is not going to get you better trader. Okay? It really is including the indicators in the overall strategy. I cannot repeat that enough. It really the most important things you need to get. We're in a bear cycle in here. No, we're not. We're not in a bearish cycle. You're in a bear cycle confirmed, which means this cycle is the strong one because this one's been confirmed. Sorry, and let's for example, let's take a quick look. Let's get there and see if this one's confirmed or not. No, it's not. As you can see, when we were here, sorry, I haven't seen actually if we were or not. So let's see, for example, right here, we've got the overbought cluster, okay? So we draw a line of the overbought cluster, which is supposed to act as a resistance. We've got the first candle close above, okay? So this is something you shouldn't have normally. And as you can see, the indicator is not showing you the bearish OK. So it detected the price went too far beyond the target to consider the pattern still validated. So at that point, the bearish signal is not possible to take. Okay? Because as you can see, you don't have momentum. You don't have no momentum confirmation in here. You've got sine wave confirming, but we tested nothing, no signal. So this is not a trade you could have taken respecting the strategy. Okay, you can trade this. You cannot. What you can do instead is consider it as a viable resistance afterwards. As you can see, the price is going downward, but you cannot sell at that point. So you basically miss that trade because it's not respecting the strategy, and you basically wait. You only take the trades you want to trade by respecting the strategy. Those you miss is no problem. You're always going to miss signals. Okay, so don't be mad at the indicators because they didn't give you a signal. Okay. It's just simple. It's like that. You're not going to get all the signals. It cannot work like that. Let me just think if I forgot about talking about something. Yes, we have to talk about the divergences, of course. I thought I already covered that. So all the people who know about the momentum knows about the divergence, but most of the guys are just trading it pure stupid. So we're going to cover up what a divergence is, what are the kind of divergence you can trade, what are the kinds of divergence that momentum cannot detect, because you have to be aware that the signals are detected by algorithms, and algorithms are not perfect. Sometimes they will detect fake signals, sometimes they will miss detecting some signals, and you'll have to verify by your own eyes. I have one example right in front of me, and we're going to talk about this one, because for example right here we got a beautiful bearish divergence, not detected by the indicator, but yet this is a bearish confirmation signal. So in here you would have been able to trade. If you had a confirmation signal, you could have traded that market top. Okay? So right here, sine wave's not confirming anything, so you couldn't have traded that thing. But if you had bearish sine wave in here, you could have traded a momentum confirmation because you had divergent tops. Price is going way higher than previously, and the momentum is not. But the most important thing, when you want to trigger divergence or make sure the divergence is valid, you need to be on two different prices. Okay, so as you can see, we had a resistance in here, price cluster. Second price cluster in here, and those two different clusters have been tested, and yet here the momentum is divergent. So this is a valid divergence. We're going to take a second example of a non-valid divergence. Right here, testing that level, probably tested the same level in here. This is not a bullish divergence. Yes, yet everyone will tell you this is not. You need to test two different levels to validate a divergence on the momentum. So let me find another example in here of a divergent momentum. Right here, clearly is a divergent as well. Testing that resistance, testing this one, here you have a divergent momentum. Okay? The momentum is not making new highs, the price is. So in here, if you had a red dot, a red triangle, you could have traded that confirmation signal near that price. Okay, and this would have been a bearish reversal in here. You couldn't do that as the market was bullish breakout. Okay, so the only way you could have traded there is this, when you broke down the bullish breakout. Other questions? Once again, this is where we're doing this, so don't be shy. Ask your questions if you have any problems trading with momentum. If you have any doubts, anything that seems foggy to you, get in here and ask your questions. Otherwise, I'm terminated. So in my own opinion, I'm good. And I have nothing else to tell you guys, so if you don't have questions, we're going to stop in here. We don't have to talk for nothing. All clear? Perfect. Then if we are, I wish you guys a pleasant day. Taking profit level and momentum. Yes. All right, one question. So just as sine wave, I decided to use the exact same signals as in sine wave. We just added the divergent pattern, which is not possible on sine wave. But when you have this is the only difference you have between the signals in sine wave and momentum, just to help you identifying the strength, okay? So once again, by order of strength, you've got the cross, then you've got the overbought oversold cluster, you've got those gray dots. Those gray dots basically are overbought oversold cluster, but with high probability to keep on pushing. So it's when you have overbought cluster or oversold cluster, but momentum is detecting that we have high probability to keep on pushing further. Okay. So when you have those gray dots, you really need to be on the level you wanted to trade and be really confident into taking the trade, because they're not confirmation levels. They're mostly generally invalidation levels, which means that don't trade those, okay? I rather like you to miss some trades out of those false signals rather than taking a trade that is going to end badly. Okay, so generally when you have the gray dot, consider this as an invalidation and don't get in. Unless you have a pattern triggering by the dot, because it will happen. For example, in here you got gray dots, but it triggers the taking profit pattern. When you have this, of course, the pattern overcomes the gray dots. Okay, and it will trigger the bullish OK signal. Just basically remember that you need to have the bullish OK or bearish OK signal. The algorithm is taking care of reading the momentum for you. Okay, I'm just giving you track of what's happening, but basically just a bull and bear OK signal is doing the job. If you have that signal, you go ahead. If sine wave's confirming, and even better if you have a triangle, it means that the price is already confirming the reversal as well. But the taking profit label is basically the weakest pattern you could have. So in terms of order, remember cross, blue dots, then you have taking profit pattern, then you got bulls and bears and divergence, which basically equal, they're the same, and then you've got the exit pattern. In terms of strength, when you have exit pattern on momentum, really if you haven't took partial profits and if you have a sine wave confirming, you really want to do it. Yes, and then when you have bull okay and bear okay at the same time, then if you're really on the level you want to trade, then go ahead, you can consider it as valid. And if you ever have doubts and feel confused about that, once again, there's just one rule: whenever there's a doubt, you don't trade. It's pure and simple. If this is getting you confused, you just don't trigger the trade and move to something else. There are limitless, endless possibilities in the market. So don't overthink things. If you're confident enough to put the trade, then do it. If you're not enough, just be patient and find some other technicals that suggest you'll have better confidence in what you're doing. Okay? If you take a trade and if you change your mind by being a switcher, then you don't want to be that kind of trader. Okay? You have a mindset, you have a strategy, you have step 1, step 2, step 3. If you can check all those 3 steps, just go ahead. Don't ask too many questions. You can be being right or wrong is nothing interesting in trading. You don't care about that. You have the strategy being able to be applied into a market, apply it. Point. So if we're good, we're going to stay there. Thank you guys for your attention. I'm going to give you a few last seconds if you have other questions you might want to ask. Otherwise, I think you are good to go. That everything is crystal clear concerning momentum. And we will cover up other indicators. I bet we will choose momentum, a sine wave at some point. So we'll do the exact same thing about sine wave later on. Yes, we have the oscillator. We can talk about that. The oscillator in here, because momentum is going to have cycles. It's what we call momentum cycles, just as we call price cycles, the one we look at through sine wave. But these are 2 different things, okay? Momentum cycles helping you to define the divergence, for example. When you want to have a divergence, you need to have 2 different cycles, meaning bullish and bearish oscillation of that thing, which is called the oscillator, okay? So you want to see the oscillator crossing below 0 and above 0 with clean up and down movements to consider a cycle completed, okay? And generally, when you have the momentum above 0, you want to take profit out of the bullish oscillations and avoid trading the bearish oscillation. As in here, for example, you don't want to trade this, okay? Even though you had a red cross, you don't really want to be into this. The momentum is really too high to consider buying this thing, or selling this thing, sorry. Okay? Anyway, you couldn't have traded this after an exit signal. It was really out of context trading this signal. Because just once again, if you just have a look at the signals, most of the signals are just going to be irrelevant. Because once again, what gives you the actual trading signal is the fact that you are in an interesting price area, and moreover that the 2 indicators are confirming, which will literally flush out 90% of the signals. So as I said, if you're the kind of guy who just put the indicators on the chart and said, okay, that's bullshit, the signals are just worthless, it's basically that you just didn't got the work I've been doing in here. It's nothing like giving you the precise, perfect magic signal that's going to get you rich and easy money. It's nothing like that. Okay, I'm going to give you many signals, but many of those will not confirm each other because the indicators are meant to be complementary. And whenever they go complementary and they give you two signals by different angles, then you know that signal is qualified. And if it happens in a price area, then you have the 3 steps checked. All right, we're good. So the oscillator is just meant to that. Okay, it's mostly meant for scalpers, so you don't really want to trade those. I added this for those who want to scalp, and I sometimes use that as an indication in my trading. But this is not something you really have to overthink. Okay, it really is like I like that thing in the MACD, and I used it in the momentum. Okay, it generally means that when the momentum is downward, meaning under 0 or going to the downside, and the oscillator is doing as well, it really is the price you don't want to trade against, okay? You don't trade a bearish oscillation going to the downside with a bearish momentum as well. All right, you don't want to trade bullish in this. You want at least to see the oscillator going to the upside, that's the minimum. Okay. So goodbye, guys. I wish you a pleasant day or evening, depending when you're listening to this. Goodbye, and thank you once again for your attention. See you next week. Before we go, I really miss having some free time for me aside from trading. So I won't be able to handle 2 shows a week as we initially did, meaning that we meant those on Tuesdays and Thursdays previously. We're going to just make one right now on Wednesday, just like we're doing today. So the live show timetable right now will be on the Wednesdays evenings, and we're going to do it each and every week. We're no longer going to make the live analysis, but we are still going to make those live educational sessions in which you'll be able to ask your questions in real time. So see you next week.